Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Backfiring mistake number 3, savers risking their hard-earned money in the stock market when they don't have to. Stay tuned.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, Tony Walker.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do. Them that have it, get more of it. The less they need it, the more they love it. And it sticks to them like glue. Funny, funny, funny what money can do.
Infamously referred to as Black Monday, September 29th, 2008. That was a day that began with a record stock market plunge costing savers thousands, if not hundreds of thousands of dollars. Many of these savers had their life savings in IRAs and 401k plans. So as you can imagine, losing up to 50% of your retirement was very, very devastating. I used to say back during this time, these 401k plans quickly turned into 201k plans. Yep, it was a scary time, 2008, but 2008 was not the first time the stock market took a serious plunge out of nowhere. In fact, as we record this show with America's favorite financial sidekick, Aaron Orander, on March 12th, 2019, the stock market recently plunged in the last quarter of 2018. In fact, during the month of December of this last 2018 was one of the worst Decembers in stock market history. Well, welcome, folks, to the Worry-Free Retirement. And on today's show, we are covering the backfiring mistakes that can wreck your retirement. And we're on number 3, savers risking all their hard-earned money in the stock market, or, as I like to say, the people moving their money from Main Street to Wall Street when they don't have to. As I said earlier, Mr. Aaron Orander is with us. Aaron, how are you doing today?
Good morning, sir. I'm doing good. How about yourself?
Very good. As you can imagine, I'm pretty giddy today, Aaron.
Yes.
Yes. Now, no, the magic of radio isn't that magical. People cannot see what's behind me now, but we are in our studios, in our Louisville studios, and behind me is the brand new set that we've been working very diligently on, had designed, they were out of North Carolina somewhere?
Yes, sir, out of North Carolina.
I think they met our expectations. Wouldn't you agree?
I'm happy, yeah. We'll see how it goes, but I'm very
happy. You're happy, I'm giddy. Okay.
You're happy, so we're all happy.
Yeah, and I told you earlier, if you tell my wife what I spent on this set, that's it. You're done.
I don't know what you're talking about. I have no idea.
Good
I plead
job,
the fifth.
Aaron. Good answer. Aaron, let me tell you. Let me ask you a question, Aaron. And then, folks, as you're riding down the road or whatever, I like to ask Aaron these questions. So, and also too, when I ask the question, I'm going to ask it very slowly. I want you to think, Aaron, of your immediate response and just say whatever comes to mind. Okay, you haven't heard the question I'm getting ready to ask you. Okay, and folks, same thing. Listen to this question carefully and just pop out whatever pops out, and I'll address it. All right, here's the question: what if you could accomplish all of your financial goals in retirement without the fear of running out of money and without having to ever put 1 red cent of your hard-earned retirement savings in the stock market? Would that be something you'd be interested in doing? Yes or no?
Yes.
Aha, bingo. And now, if you said the same thing, folks, and didn't question it, and, well, maybe, I don't know about that, Tony. If you said, like Aaron, oh yeah, let me repeat that. Let's turn it into just a response. What if you came to me and said, Tony, I need your help in accomplishing my financial goals. I do not want to run out of money, and I do not want to put any money in the stock market. Tony, can you help me? If I said yes, the same thing, you'd probably say, Aaron, how do we get started, right?
Yeah, sign me up.
So, folks, if you're a saver, you would have responded immediately. Now, if you're an investor or speculator, we're going to touch on the 3 personalities of money a little bit today. You might say, again, that's fine. If you're an investor or speculator, well, I don't know, Tony, that I don't really have that much of a fear of running out of money, and I like the stock market. Folks, that's fine, but this show is dedicated to savers. Remember, a saver personality is someone who's more concerned with the return of their money, that's what that question is dealing with, than on it. So for nearly 35 years, here's the thing, folks. I've been meeting in person with savers, literally, and I can document this. Sometimes I think, Aaron, people think, oh, you haven't met with thousands of people, have you? I have. I've got documentation. We have a database which tracks every appointment I've ever had. And I say things like this. I mean, I don't think I have to allow somebody to come in and see our database, but as a fiduciary, for instance, we're regulated. If a regulator wants to see our database, they could verify that it's there. But literally, I've had thousands of meetings with savers. In fact, what happened was over the years, as I kind of tried to understand the mind and personality of these people, like my granddad, who was more concerned about the return of his money than on it. He had no money in the stock market. I decided to try to explore and use my degree in psychology to figure out, could people really have financial personalities? And I know, Aaron, you're familiar with this. You've seen that test I created.
Yes, I took it when I first started with you.
Did you really?
Yeah.
I don't think you told me that. Did it come back as a speculator? Is that why you're not telling me?
Yeah. That's why. I didn't say anything. But
So basically what I did, and again, this test is absolutely free. In fact, to take that test, you can log on to TonyWalkerFinancial.com. We have it right there on the home page. You can just put in your email and then take that test, and it'll immediately tell you after about 5 minutes, it's very simple, what your predominant personality is. Now, we're saying predominant. You can have a little of both, but what we're trying to do is help people understand, are they a saver, investor, or speculator? And then what happens is, this is what you should be doing, based on your financial personality, tailor your investments and your investment strategies around that. Now, the financial world would just as soon you not know this kind of stuff. What the financial world wants you to assume, especially Wall Street, is that in order for you to make it in life, Aaron, you've got to be in the stock market. Have you kind of gotten that impression?
Yes.
Yeah, you just have to be. And I'm thinking, no, wait a minute. As we're going to find out, up until about 1978, roughly 90% of the people that could fog a mirror back then didn't even have any money in the stock market. So why is it now? What has really changed, and how did Wall Street take this narrative of safety and security and certainty, which a lot of people like savers, like me and my granddad, how were they able to convince all these people, these savers, to take their hard-earned money from Main Street over to Wall Street? Some interesting stuff coming up. I'm going to tell you why it happened, how it happened, and how you can defend yourself and protect more of your hard-earned money, and yes, worry less about it. You're listening to The Worry-Free Retirement. I'll be right back.
It only happens one time, and only 75 people can attend this exclusive free screening of the breakthrough documentary, The Power of Zero. The Tax Train is coming. Thursday, April 18th at 7:30 p.m. at Greenwood Mall 10 Theater in Bowling Green. This shocking film reveals why you could be paying far more in taxes in retirement and how you can defend yourself. If you've saved at least $250,000 in retirement assets or make more than $150,000 per year, claim your free ticket now by registering at TonyWalkerFinancial.com/movie.
Tired of the roller coaster ride of the stock market? Let Tony Walker show you how to smooth out the ride with your money. Log on to TonyWalkerFinancial.com and let's get started.
Welcome back to the Worry-Free Retirement, and we're trying to kind of figure out where this notion ever started and where it came from, in terms of, in order to make it, you've got to be investing all of your money, or most of it anyway, with Wall Street, and why we need to debunk this myth, and how that whole strategy, if you're a saver, can truly backfire on your retirement. At the break, Aaron and I were talking a little bit about that. What was your comment, Aaron, about the why? I don't think I asked you why you thought that way, or go back over that again, what you were thinking.
Well, I just think that, so many people are led to believe that they need millions and millions of dollars in order to retire. We've all seen those ads where the people are, walking around with the suitcase that's got their number on it, how much they need, and it's always in the millions.
That's a good point. And, I spoke at a conference years ago, this reminds me, and I think I made the fellow a little upset. I didn't mean to, but he was an advisor out of New York City. And he had spoken about some really, really intriguing, really cool stuff, but it was pretty complicated. But all the strategies he was talking about was for multimillionaires. And I'll just call him Jim. So then I was next up on the stage, and I kind of kidded around with him. I said, well, Jim, I don't know about you, but in Kentucky, southern Indiana, the area I serve, there's not a bunch of multimillionaires running around like New York City.
Not a bunch of multimillionaires running around. Nope.
And I think he took offense to that afterwards. He said, well, you called me out. I said, no, I wasn't calling you out. I'm just saying who I'm working with is Joe Lunchbox. You know, the average person that comes in to see us, majority of them, we have a few worth, several $1 million, but the majority of people we have working with us, some of them have 50,000, some 100,000, $500,000, but it doesn't matter. We are there to help savers. And what Aaron is saying here, folks, that is just not true. You do not need, to stockpile and try to reach millions of dollars. And in fact, it's funny you mentioned that, Aaron. Not this past week, I've had appointments. Last week, somebody told me that. He was so discouraged at the end of last year, he wanted to retire. This is the logic, and I don't know where he got this from. I guess it's from Wall Street, but he said, I'm going to retire when I get $1 million in my 401k plan. So he was close, and guess what happened in the fall of last year around Christmas time? It all plummeted.
He took a
dive.
Took a loss.
So it drops to 700 or whatever. So now he's just put off retirement. And I said, first of all, who came up with that number? And as you said, Aaron, I think he just probably assumed he had to have 7 figures. So, folks, first of all, that is not true. Now, granted, some of you, based on your lifestyle, you're going to have $1 million plus. But it depends on how bad you want to retire. So a saver, that's the beauty of working with a saver personality. A saver personality says this: I've got so much money to work with, I can make it work. An investor says, I don't have enough money to work with, I want to make it work. In other words, I'm willing to take risk. I want to grow my money. Let's go back in case you're just joining us. I created a wonderful little test. I used a couple psychology professors years ago at Western Kentucky University. That's where I graduated from college and have a major in psychology. But they did a wonderful job. What we did, this was back in our old days on one of the local TV stations, the large network, Aaron, that you and I had the TV show and worked together with. But anyway, I don't even remember this. Remember we gave away gift cards, $25 for people to take tests. We had to have over 100. Well, I spent a lot of money on that. The reason the psychologists at Western, the professors wanted that, they had to get a large enough sample so they could try to work on this test. So this test, the 3 personalities of money, folks, is very accurate. It's non-biased. Okay, if it says you're an investor or speculator, it'll tell you. And then you could go find advisors who work with investors or speculators. But if your predominant personality is a saver, that's what the Worry-Free Retirement process I created is all about. It is the only type of process that is specifically designed to help savers worry less about money. Okay, so where did all this start, Tony? And I know I'm going to have to mention 1978. You said, oh gosh, here we go again. It's important, folks. What in the world was going on in 1978? 1978 was the year that Congress enacted into law the 401k plan. Now, why did they do that? Now, this is just theory, Aaron. My thoughts were, I don't know if they were out bowling together or what, a conference, but my thoughts were some really big employers, businesses, you with me? Some folks from Wall Street got together, and Wall Street thought, how can we get more money from Main Street to Wall Street? And the employer, I'm making all this up, folks, I'm just imagining this is how it happened. And a politician was in this room too, okay, in this meeting. And then the employer said, well, it's funny you mention that because I'm getting to where I can't afford these darn pension plans. That's what my granddad was under. You see, folks, employers, even the state of Kentucky is having this problem, has to fund what's called this unfunded liability for pensions. They're very expensive, and that's why we see the teachers' retirement in trouble. It has to have so much money to fund these future liabilities or pensions, okay? So the employers were realizing, man, we can't keep doing this. We got to get out of this pension, but we can't just cut the legs out from under Joe Lunchbox. What do? What is Matt doing over there, by the way, your favorite financial sidekick? He is actually, Matt, that is very, he is stretching.
He's getting his morning exercises in. He's ready.
He's actually pretty flexible. If I've been over like that right now, you could just call the chiropractor because you'd have to haul me off.
We're filming the TV show right after this. I think Matt's getting ready. I think he's stretching and getting ready.
That was hilarious. And it wasn't distracting at all, Matt. Don't worry about that. You're doing yoga over here or something. But anyway, hey, stretch your finances. We can take this
there
somewhere.
You go.
There we go. So where was I, Aaron?
We were talking about the pension and the politicians talking about.
Okay, gotcha. All right, so here we go. We got the business people, the employers who can't afford pensions. We got Wall Street who needs more people from Main Street to move money to Wall Street so they can make fees and whatever they make on their money. And then we got the politicians saying, not a bad idea. I tell you what we'll do to incentivize people to put into this new plan. We'll call it a 401k plan, and we'll let people put money in pre-tax. That sounds good, doesn't it, Aaron? Mm-hmm. Pre-tax. Really all we're doing. Oh, I've got to mention this. I haven't bounced around a lot today, folks, but we got a lot going on. I know you were here in the studio, getting the studio set up, Aaron. I guess you heard the feedback. We had folks in Louisville. We rented a movie theater recently. It's a documentary called The Power of Zero, The Tax Train is Coming. We had over 100 people come there. Powerful movie about this very subject. All of these trillions of dollars currently stockpiled in 401k plans, and here's the key, folks, it has not been taxed yet. So with deficits, with the spending going out of control, what this documentary talks about is, okay, we don't know what the future of tax rates will be, but right now we are in some of the lowest tax rates in history. Back in the 50s, 60s, 70s, tax rates were in the 70% range, folks. We've got some politicians talking about, let's go back to those times. Folks, if we go into a higher tax bracket 10, 15, 20 years from now, and they tax 40 to 50 to 60 to 70% to try to deal with all these deficits and debt, do you realize you're postponing this tax to a higher tax bracket? It means you're costing yourself money. So with that said, and we had such a response, and then out of our Bowling Green office here, and a lot of our clients and prospective clients said, hey, I saw where you're having a movie up there in Louisville. Can you not do it in Bowling Green? Good news, folks. On April 18th in Bowling Green, we've got the AMC 10. We've got a theater there rented out. That's the one over by the Greenwood Mall. In fact, you can already go to TonyWalkerFinancial.com. I think we've got it on the website. You can go on and register, again, for this free movie. And there's only 75 tickets. Now, before you run over there real quick, there are some parameters. First of all, you have to have at least $250,000 of retirement assets, either in a 401k or IRA, minimum to attend. The reason we do that is because it's limited seating, and we have to have enough money to share with you the strategies to save on taxes. If you don't have a lot of money, folks, don't take this as a criticism, but you're not going to have a tax issue. So you either have to, one or the other, you either have to have currently $250,000 in a 401k or IRA, or to be eligible for this free ticket, you make currently at least $150,000. All right? So again, if that's you, only 75 tickets. It's going to be on April 18th. That's a Thursday in Bowling Green, Kentucky. You got to go online to register, though, at TonyWalkerFinancial.com. We'll get that to you. I think it's /movie. We'll get that to you. Don't worry, you'll find it. Now, you might be sitting there saying, well, thanks a lot, Tony. You know, I got $100,000 in a 401k and I need some help. That doesn't matter. We can still help you. It's just this movie, okay? So if that's you, if you say, well, Tony, I can't go to the movie, or I don't have that much money, but I would still like to talk to you, no problem. Just go to TonyWalkerFinancial.com, click on the Let's Get Started button, and we can make that happen real soon. We can either meet or talk by phone, or we can meet in person at either our Louisville or Bowling Green, Kentucky office. And best of all, there's absolutely no cost or obligation to meet. All right, when I come back, I'm going to share an interesting concept. We're going to go back to that question, Aaron. In fact, let me find it here. I want to read it verbatim. Let's repeat this question, folks. In case you're just joining us, I asked Aaron, America's favorite financial sidekick, a question earlier, and here it is. And I'll put a percentage rate with this, Aaron, just to put some legs on it. What if you, that's you listening, I'm talking to, folks, could accomplish all of your financial goals in retirement without the fear of running out of money, and not have to put one of your hard-earned dollars, not 1 red cent of your retirement savings in the stock market? And listen here, and all that we earned you was 2%, but you could accomplish all your goals? Would you want to know about it? I'm assuming you are. Stay tuned. When I come back, I'll share exactly how you can do that. You're listening to the Worry-Free Retirement.
It only happens one time, and only 75 people can attend this exclusive free screening of the breakthrough documentary, The Power of Zero. The Tax Train is Coming. Thursday, April 18th at 7:30 p.m. at Greenwood Mall 10 Theater in Bowling Green. This shocking film reveals why you could be paying far more in taxes in retirement and how you can defend yourself. If you've saved at least $250,000 in retirement assets or make more than $150,000 per year, claim your free ticket now by registering at TonyWalkerFinancial.com/movie.
Are you retired or retiring soon? Do you have a 401k, IRA, thrift savings account, 403b, or lump sum pension that you'd like to move to safer territory? Did you know that all the money you see on your 401k statement isn't really yours? Depending on your overall taxable income, the government has essentially a lien on your 401k that can tax as much as 40% of your money when you go to take it out. Tony Walker calls this the 401k tax tumor. For over 33 years, retirement specialist Tony Walker has helped thousands of savers worry less about money by creating game plans to deal with your tax tumor. Get control of your retirement by controlling the taxes owed on it. Schedule a free meeting to see if you can reduce your tax tumor and provide a guaranteed income you can never outlive. To get started, simply log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
Welcome back to the Worry-Free Retirement. In case you're just now joining us, and maybe you stopped in the car and gotten off on the side of the road and you're stretching like Matt, just trying to stretch your finances. We were talking about that. Matt, at the break, he apologized, but I said, Matt, I forgot. He was climbing, he and Aaron, on ladders yesterday getting our studio set up, and said, man, I'm so sore. And I thought, boy, that brings back memories. Did you know I used to have a painting service in college?
Yeah, you've talked about that before.
Collegiate painting.
What was it?
Collegiate.
Collegiate painting.
Yeah, because I was a college student. It's real catchy, isn't it?
All right, yeah, it's catchy.
And it's funny to think about. Oh, I never will forget a buddy of mine, Chuck. I won't name his last name. So I had to have people, I had these buddies help me. It was kind of, looking back, I wish you'd been around to film this. So anyway, Chuck had never really painted before, and I'd been painting, and I got up on a roof with Chuck, and I thought, I'll get over on the side of this roof. There was a dormer sticking out on the roof. You know what a dormer is, Aaron?
Yes.
Okay. So I said, Chuck, all I want you to do is paint the side of this dormer, and I'll come back and check on you. He goes, well, I can do that. So he gets up there, and I've noticed him real meticulous, real slow, and I said, oh, he's doing a great job. So I go back up about 20 minutes later, I climb up on the roof, and I walk over to that side. It looks great, and I look down on the shingles. There's like an inch-wide strip of paint, perfect, going down the shingles where it meets with the dormer.
Okay.
I said, Chuck, what are you doing? He goes, what do you mean? I said, what's the deal with the paint on the shingles? He said, well, I thought it might want a protective strip. And I said, Chuck, no more protective strips.
This is not protective paint.
But the funny thing was, I was talking to Matt, the funny thing was I got a huge extension ladder that my granddad let me use. It was like a 28-footer. The first house I ever did, I had to go up and down that ladder, and I was fine. And then the next morning I get up, I can barely walk.
Can't walk.
I was so sore. So anyway, so maybe you're like that, folks. You're kind of stagnant right now. You're fearful of the market. You've had money in the market. I have a lot of you coming in with this last downturn we just had around the holidays, and you're like, I'm done. I'm tired of this market. I'm tired of worrying about it. So what I'm going to share with you today, all right, here's the question again. I'll summarize it very briefly. If all we ever earned was 2% on your money, but we could accomplish all of your goals and objectives in retirement, would you want to know how to do that? So if you're a saver, you've got to be saying, well, yeah, Tony, forget all this risk of money. So what are my options? Well, the first option is ours, the Worry-Free Retirement. And we're going to compare it to, we'll just call them the other guys. That would be the guys on Wall Street, okay? Now, again, let me preface this. Folks, there is nothing wrong with investing in the stock market. Our saver clients, we've got over $60 million in our Charles Schwab platform. Most of that money, quite frankly, is in safe stuff. But so let me preface this. I'm not against the stock market. What I'm against is savers not understanding that you don't have to be in the stock market to be worry-free, all right? So make sure we're clear on that. So for you stockbrokers out there and money managers, don't get upset with me. We're talking to savers, and I would encourage you to think about this a little bit. Rather than just pigeonholing everybody and thinking everybody ought to be an investor or speculator, realize that God has wired us all certain ways. So I'm just working with savers here. This message is for savers. Okay, but let's just say we're going to earn 2%. That's our guarantee. You with me, Aaron? Mm-hmm. That's all we're going to make you for the rest of your life. The other guys are saying, we can make you 10%. So I'm saying 2% guaranteed. Yeah, you just shook your head. You can't. I know you can't see this on radio. Aaron shook his head real funny. Why did you shake your head when I say the other guys say they can make you 10%? What's the problem with that?
There's not a guarantee to it. They can make you 10,
Then,
but you
what's
could
the
also
key word?
lose. Can.
Guarantee and guarantee. I like that.
Okay.
Yeah. So again, in our example, we're guaranteeing 2. They're hoping for 10. Big difference. Now, so how do we do this though? Well, what we do is, folks, we're not out chasing returns. That's not the purpose of the worry-free retirement. The point and the philosophy of what I do is here's the things we're going to try to do for you. Think about this. A money manager just manages money. They shuffle it around and they try to earn you 10, but that's all they do. That's their process. Our process begins with guarantees. It begins with very low, very conservative assumptions. I like what Will Rogers said. He once said, always assume the worst and you'll never be disappointed. So we're kind of doing that. That's okay. But here's where we're different. We are focusing on low costs. How do we do that? Our fees are much lower. The other guys charge about 1.5%, Aaron. That means on a $100,000 account, every year they're going to take $1,500 out of that account, whether you make money or not. You understand that?
Okay.
Not a great deal for you, especially if it's going down. Our fee with our Charles Schwab platform is 0.6%. So in that example, on $100,000, we charge $600 a year. They charge $1,500. That's quite a bit of money, isn't it? Mm-hmm. I mean, Preston could use that $900, couldn't he?
Yeah.
A year?
Oh, yeah.
Figure out something
he
to
could
do
get
with.
like maybe one toy with that much money.
We also minimize risk. So for a saver, if you know that your account is not going down and you're worried about risk, wouldn't you assume you're not going to worry about money? I call it sleep insurance. So we promise sleep insurance, folks, little to no risk. Here's a biggie. And again, I hate to say just if you're just now joining us, but I do talk to a lot of people that listen to this show, Aaron. They're jumping in and out of the cars. You know, they catch some of it. So again, let me repeat this. We are very, very much focused on tax planning. We're not talking about tax preparation, folks. We don't do income taxes. What we do is we try to help you plan for the future taxes that are going to be due on your 401ks and IRAs and how to mitigate or reduce those. One more time, let me announce that. We will be in Bowling Green at the AMC Greenwood Theater April 18th. It's only open to 75 people. You have to qualify financially to attend that particular viewing of The Power of Zero. The Tax Train is Coming. And we might even have a show, I think I probably will have a show pretty soon, Aaron, that deals with the 5 options you have for dealing with what I call your tax tumor. But log on to TonyWalkerFinancial.com if you would like to register for that movie. If you have any questions about it, by the way, about the movie itself and how to qualify for your free ticket, you can call us at 877-499-9255. Okay? So we're comparing worry-free retirement with the other guys, Main Street versus Wall Street. We're going to try to earn you 2 guaranteed. They're trying to earn you 10 non-guaranteed. We're focused on low cost. They're not. They're focused on whatever the cost. Okay? We're focused on little to no risk. They're focused on the idea that in order to make more money, you have to be willing to take more risk. See the difference, folks? Huge difference in philosophy. We're trying to attack cost by lowering taxes, gathering a game plan. I met a gentleman the other day at a workshop. He's with a large brokerage firm. He said, Tony, this is great stuff, all this trying to deal with the tax tumor. He said, my broker's never even talked about saving on taxes. So, folks, again, a money manager, most of them anyway, I'm not going to speak for all of them, they're not trying to plan for taxes. So again, if you're sitting there saying, Tony, that sounds good to me, I'm tired of worrying about the money, I'd like to put most of my money back on Main Street, I'm tired of Wall Street and the ups and downs of the market, and I want an advisor who can meet with me in person, not going to just pass me off to the next person that's in the firm. I want somebody that's going to meet with me that's got your type of experience and expertise. I will be happy to help you worry less about money. Best of all, to talk, there's no cost or obligation. All you got to do is log on to TonyWalkerFinancial.com. When you click on that Let's Get Started button, that information is confidentially sent to our offices, and we will follow up. I'll personally talk to you by phone, or if it warrants a meeting in person, I can meet with you in person at either our Bowling Green or Louisville, Kentucky office. So do it today. Take action. Let's safeguard this money so you can worry less about it. Log on now to TonyWalkerFinancial.com. Well, we hope you've enjoyed today's program. I've enjoyed being with you. Next week, we'll finish up our 4th backfiring mistake that can backfire on your retirement. But between now and then, you remember, if all else fails, you be worry-free.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do.